Chapter 11, Bulls, Bears, and Shares. Now that you know how to read stock charts, let's explore prolonged market periods which emerge in longer-term market. To demonstrate these market conditions, here's a look at the last decade of the S&P 500. And then it shows a graph of the S&P 500 from 2007 to late 2018. You can see market conditions just by looking at charts. Long run-ups are called bull markets. In a bull market, you can expect to see more stocks go up than down as the whole market collectively increases in value. In our snippet of the S&P, we can see bull market conditions from 2010 to 2015 and mid-2016 to 2018. If you look at the chart above, that's periods of consistent increasing overall market performance. Extended downtrends indicate bear markets. You can see bear market conditions from 2007 to 2009 when more stocks declined in value than appreciated, bringing the overall market down. As a long-term investor, timing bull and bear markets can be difficult and sometimes unprofitable for long-term outcomes. With that said, you should always be skeptical about the companies you invest in and ensure that they perform up to your standards as a shareholder. Constant price stability with no strong movement up or down indicates sideways markets. We see little price movements across the overall market from 2015 to 2016, indicating a sideways market where overall stock values fluctuate but do not move up or down together. For active traders, sideways markets present many opportunities to buy supports and sell resistances, as we will explore in Chapter 24. You can quickly start building a long-term portfolio by looking at brands that you already use in your daily life. Ask yourself which companies you know or that you think you make a killing by providing value through goods or services to the marketplace. If the company is public, investigate their financial releases, previous growth, current management, and future goals. You should always know a lot about an underlying company if you're going to hold a stock for 10 years or more, outside of an index. See Chapter 16. If you believe in Chipotle Mexican Grill Inc. more than any other company, then a few closed stores will not hurt your long-term prospects. Remember that some news outlets will summarize major points in big companies' quarterly reports, 10Qs, and annual reports, 10Ks. With that said, it's still important to recognize where and how much money flows through a business to determine their long-term potential and safety as an investment by reviewing individual financial data sheet released periodically. If you commit your time to studying the operational finances of an individual business, then you can expect higher returns as you masterfully understand the companies in your portfolio and avoid potentially unsustainable companies. Additionally, financial reports frequently have forward-thinking plans embedded in them for shareholders. Aside from exciting 60-page annual reports, companies will also invite you to shareholder meetings when you buy their stock. Shareholder meetings can be in person or online, and sometimes you can vote for what the company should do in the short or medium term at these meetings, after they report some company news. Shareholder votes are frequently used to bring in new executives with shareholders' approval. These meetings let you see how hard companies are working to bring in profits for their shareholders, also known as you. Though none of these meetings are required or even meaningful in some cases, they show a company's dedication to shareholders. Annual meetings in particular are major events for companies like Berkshire Hathaway Inc. This sort of long-term involvement goes beyond stock charts and numbers and lets you look holistically at a company and their stock.